Good morning, good afternoon, good evening, good night, wherever you are, whenever you are. Welcome to a new Breakout Solutions live stream. I'm your host, Matthew Batiri, here with you today again for a Bitcoin technical analysis video. I do apologize if you hear me sniffling or coughing. I am still unfortunately quite sick. I just cannot shake this cold / flu, whatever it is, and I'm just getting by. So please bear with me. Alrighty, so last week I did say on the stream that I was still remaining bullish as we were still above this trend line that has supported us all the way back from late December to last week, where we had not only a collapse, but some people said it was because Elon sold his crypto. Look, at the end of the day, technical analysis is technical analysis. It was 50-50 for us to continue from where we were, and unfortunately we just weren't enough. There was not enough liquidity on exchanges, and a lot of shorts got liquidated. Hence why the dump that you see in front of you, this is on the Bybit exchange. So if I zoom into the daily, you can see that Bybit came all the way down to 23,601, and this is on the BTC USD pairing. On the USDT pairing, it went to 24,200, and on multiple exchanges, it barely broke 25,000. So there's a little bit of because of the illiquidity on multiple exchanges, which we've been talking about in regards to liquidity, meaning most people over the last 6 months or 9 months, not only have they been buying Bitcoin, but they've been buying Bitcoin and taking them off exchanges. So when there's a decrease in liquidity, the dumps get more and more aggressive, and we tend to see that more so during a bull market. So if we go back and quickly look at the last bull market, you can see that throughout the bull market, you can get some quite some large dumps in a day. So here we go back here. This is when we were just about to, when we just broken 20,000. Over the course of a couple of days, we went down 10%. This one right here was also like not a bad dump, so that was 7%. Here's another one where we dumped basically 17%. So you can see that during this time where people are buying and then either taking them off exchanges and not doing much, or not putting them on the order book to buy or sell, we just get these flash crashes. And that's exactly what happened over here. So think of it as a bullish sign. Obviously the market dumped, but think of it as a bullish sign that people are now buying crypto, taking off exchanges because they see the long-term value of this asset. Now, that being said, because they see it as a long-term value of this asset, that means the price appreciation, over a long period of time, and this is the type of vision that you need to look at Bitcoin. It's a store of value. It's not something that most people would like to sell continuously. They just want to buy one and either give it to their kids, have something that they can fall back on if, SHIT hits the fan. Don't want to be demonetized on these videos, even though we're not making any money off YouTube. It's just we want to make sure that this is a child-friendly atmosphere. So back to the weekly. A couple of things to look at. On the exponential moving averages, we can see that we hit the 200 period exponential moving average. The stochastic RSI on the weekly is still pointing down. And if we mark out every time that we had a bullish cross, right, we do get a reversal on the pump, a reversal, but unfortunately we're nowhere near those moving averages wanting to come back together. So right now it looks like probably further continuation to the downside, at least in the short to medium term. So as we can see, because it's still pointing down, we probably had, if we line up this last dump back here, or this when the moving averages were coming down, so that was at about 35. And it wasn't till 1-2 weeks later did that moving average back over. So we probably have at least 2 more weeks. It could be even worse if we do something like this, where we had 1, 2, 3, 4, 5 weeks until we had a crossover. And even when we did have a crossover on the stochastic, we still had that dump from the Russia-Ukraine war. So I can say confidently that probably in the next 2 to 4 weeks, we're still probably going to have a little bit more further downside. Doesn't mean we are not going to get any bounces from here. A few people on the interwebs talking about a possible head and shoulders if we do come back up. But right now, things are looking a little bit bearish. So now if I throw on the 50 and 200 EMA, you can see that this blue line right here, it doesn't have a lot of price history. So we'll just go to the BLX chart. We can see that, we can see that on the BLX chart, we are below the 200 period weekly moving average, and on the daily time frame, we are also below the 200 day moving average. So if you are someone that would like to, maybe sell your Bitcoin a little bit higher and buy back in, which is always a risk. I never recommend anyone doing that on spot, of course, but I've marked out this line where the 200-day moving average is. It lines up with the 200 weekly moving average, and there's also a CME gap, if I'm not incorrect. Yeah, there's a CME gap where we had this dump overnight when the CME was closed. So this gap as well is around about that same zone that we have, marked out with our moving averages. So if I zoom back out, okay, this is on the, why is this looking different? Okay, hold on, something's up here because the moving averages have slightly moved. Okay, why am I getting the moving averages in a different spot? There we are. Why the 200-day is slightly different. Oh, it's on the BSC charts. Why we were on the CME chart. That's why the moving averages are slightly different. So we can see that the moving average here is about that. So 27,300 is about that spot where we had that CME gap. So let me bring back the CME. Hopefully my internet is staying stable. So the bottom of the CME gap is 27,000, 27,500. So this zone is going to pose quite some issues for the Bitcoin price to come back through. So 27.4 to 27. So we can go back to this chart where we had the moving averages. So we had, let me just bring back my box. So 27.4. Remove that. 27.4, where's 27.4? About there, okay, to 27. So this area here, not only do we have a CME gap, so the price will probably come back up here, but it's just going to be too much resistance. We would need a lot of volume and liquidity to break back above the 200-day moving average and the 200 weekly moving average. So in the short term, all we can assume is further downside, because this is what the technicals are telling us. The same way that the technicals were telling us to stay bullish whilst we remained above this trend line, but we had that quick drop, and now we are where we are. In the short term, I can't tell you that much because unfortunately it's Monday my time, and the New York exchange does not start till about 11 or midnight tonight. That's probably where we're going to start seeing a bit of resolution. My opinion is it doesn't really matter if it's up or down, but eventually I think over the next few weeks it's going to be further downside. If we do come up, as I said, I'll be looking to short / sell some Bitcoin up here between 27 and 27.5, and then the eventual target, a lot of people are talking about possibly revisiting 12,000, but if we just draw a simple fib from low to high, we do have a golden pocket. I mean, let's bring it back down to here. We do have a golden pocket at 21,780. Golden pockets are usually a very good, a good area to be buying crypto. But anyways, even if you're not someone that does any leverage trading, any dip like this is always a good time to be dollar cost averaging or laddering in some entries into Bitcoin, because sometimes we just don't know where the bottom can be. I personally think that if we do continue to the downside, I'd like us to retest the 20K marks, so the 2017-18 Bitcoin bull market high. I think there'd probably be a fair bit of liquidity there. I think a lot of people think that will be quite cheap Bitcoin, especially with Bitcoin looking to push for 6 figures. So if we get to 20K, you're looking at a easy 5x between now and the next all-time high. So those are a couple of zones, but like I said, it's very difficult to know exactly what zone we're going to see Bitcoin stop its dump. That's why the best thing to do is just dollar cost average or ladder in some entries between now and the end of time. We've got a couple of comments. Let's double check. Just people saying hi, myself saying hi to myself. Fantastic. So let's just look at a couple of other indicators. We can see that the RSI has not printed any bullish divergences on the daily. This is a really easy indicator to use called the divergence indicator. We can clearly see that whenever we've had bullish divergence on the daily, those have usually marked out some bottoms. So let's just quickly grab a couple of vertical lines and let's just pop them where we've seen bullish divergence on the daily scale, and let's see if these mark some really good bottom opportunities for us to dive into the market. Oh, there we go. Let me, oops. So when you're sick, you tend to make a lot of mistakes using these cursors. All right, so this bullish divergence created a pretty good pump. We're looking at 10%. This one was, a little mini pump, but that did mark the bottom. So that was a 9% pump over the next couple of days. We had another bullish divergence here. So that went up, 7% in a day. We had a couple back here. So that was a 16% push to the upside. And this one was a little bit of a false signal. Here we go. A little bit of a false signal for Bitcoin for a bullish divergence on the daily. So no indicators 100%, 100% working. But what we need in order to create a bullish divergence is we would require Bitcoin to make a lower low from this low and have a higher low here on the RSI. So these bullish divergences, take some time to play. I mean, look at this one. This was Wednesday the 28th, and then Thursday the 6th of July. So there's a good 7 days between it. What was this one? 13th of May and 24th of May. So there was 10 days. That's a hidden bullish. So we won't go to that one. So this one was November 9th to November 21, 10 days. This one was September 6th to 22nd of September. So, 14 days. This was May 28th to May 9th. So basically, it kind of looks like between 7 days and 3 weeks. That's the time frame that we should probably be looking for a secondary low. And, we could get something like this where we come down to the golden pocket, bit of a flash crash down, boom, gets bought back up. We've got a low in price. The RSI's, made its way up, had one final dump, boom. We've created this bullish divergence, low in price, high low in stochastic RSI on the daily. And I'd be confident sort of buying Bitcoin and this being sort of the low. And then we just start, making our way up slowly up and sideways until the halving, where we're probably more so going to get another reaction around that halving, because a lot of people see it as the catalyst for the bull run. But usually the same way that we get golden crosses, silver crosses, they tend to be counterintuitive. People get bullish when they see golden crosses, and we tend to dump around that time that we have that golden cross. And the inverse, when we have a bearish cross, we tend to pump up to the bearish crosses, because psychologically, when people see these bearish crosses and bullish crosses, people will tend to start their positions, and the big whales know that more liquidity is coming in because people are going off these simple indicators, so they tend to dump the market in the opposite direction. So right now, it's very difficult to say at what price point we're going to come down further, and this is the reason why I mentioned the different lows on different exchanges. So because the majority of exchanges were around 24,500, so just below this low here, it means that the bullish divergence that is needed, we don't know what the price is going to be, because normally the price needs to make a lower low than this low, but because a lot of exchanges was just below this low, it could be slightly below 24,400 to get that bullish divergence. But this is why you're going to need to keep an eye on the charts when things are in real time. What figure is that golden pocket? That golden pocket, Dave, good question. That golden pocket is 21,780. I think, let me get the exact dollar figure for you. Boom. Where's move this to there. Yeah, 21,714. That's the exact top of the golden pocket. So of course we can just have a range between the 618 and the 66. So it's about a $700 difference, but never counting out as well the 786. And the 786 also makes a lot of sense, because we'd be breaking down below 19.5, and this is what would cause maybe some panic. When panic sets in, that means some more liquidity in the market, which means we can move the price to the upside in the right trend. So right now, those are sort of my targets. I've given you guys, a little bit of an insight of what I'm looking at, basically looking for further price action, any price action to the upside. I'm looking for still a bearish continuation around that 27,000, 27,500, because we've got the CME gap. We've got both the 200 and the weekly 200 moving averages, simple moving averages. So there's a lot of work for Bitcoin to go to get through. Let me just throw in a couple of other indicators. Let's look at what else I have here. So on Market Cipher, we can see that we're entering the red money phase, which is not great. We're still in the red money flow on all of the major higher timeframes. You can see the 8-hour, once we're in that red money flow, it's going to take a bit of time to get us out of there. We did create this huge trigger anchor wave. If we can get another push to the downside, this could also cause some bullish divergence. So we just need to look out for all of that. I did want to throw on the hash ribbons indicator because I did speak about this last week. So one thing I just wanted to clear up with everyone is there's been a few iterations of the hash ribbons indicator signaling a buy signal. And according to Crown Crypto, this is someone that does a lot of statistics. If you want to go check out Crown, go check out Crown. He's really good at talking about statistics. I'm pretty sure I remember him saying there's been 15 iterations of this buy signal. 13 have always led to a positive. And every time we've had a buy signal, the previous lower low on the weekly, we've never had a weekly closing candle below that. We have 2 out of the 15 iterations, but 13 out of 15 times it's never been the case. So if we're going off statistics and probability, this week, if we have a dump down to whatever price range, the weekly closing candle, the body should be above $25,917. Right? Should be. Like I said, it's occurred 13 out of 15 times that it's been, positive. To the 2 times that it did go below the previous weekly low close, then it's not 100%. This is why sometimes we need to look at statistics in order to get the best result from our trades. So right now, I do feel like there is obviously a fair bit of sell pressure. We've broken positive market structure. And now we just need to hopefully get lower prices. It'd be great to buy some more Bitcoin because if you are a true believer in Bitcoin, you know that it's going to be hitting 6 figures in the next upcoming bull market. So from here is an easy 4x return on your investment. Guys, that's all I'm feeling good for today. It's gone longer than I expected, 18 minutes. So I want to thank you guys all for watching. Make sure you like, subscribe, turn on all notifications, and I'll see you guys Wednesday for our altcoin technical analysis video. Bye for now.